Friday, September 2nd, 2016. Monaco 64 here, home of alternative economics and contrarian views. An update on non-farm payroll. It's 1:35 p.m. London time or 8:35 New York. Numbers came out 5 minutes ago. So the numbers as following. Non-farm payroll increased by 151,000 in August. Was expected to increase 180,000. But interestingly, private non-farm payroll, which excludes government jobs, was expected at 178,000 and it came out at 126,000. So basically, the market's only expected, or analysts, 2,000 increase in government jobs, while actually government payrolls increased by 25,000. So that was a weak number. Unemployment rate, 4.9%. Was expected 4.8. Previous was 4.9. The average hourly earnings, which the Fed looks at closely for, signs of inflation, as they call it. I don't think it's inflation, it's just earnings, but they say it causes inflation. That number came out at 0.1 and it was expected 0.2. So that was a weak number, average hourly earnings. And also the average weekly hours, that's on average how long people work. A previous number was 34.4 hours and it came out at 34.3, so it dropped, and it was expected 34.5. So all in all, it was a weak number. Initial reaction for precious metals was to go up. We went up to 1330. We're now at 1325, up 12. The Dow is up 50 at 18,460. The S&P is down up about 5 at 2175. Silver is back above $19 is at 1920. What else? The dollar's weaker. Euro dollar is at 112.30. Prior to the numbers, euro dollar is at 111.91, so we've gone up a bit. The British pound is at 133.20. That was at 132.70. The dollar is dropped against the yen to 103.01. Prior to the number is at 103.50. So all in all, the market is taking this number as been a weak number. So the dollar's gone down, the stock market has gone up, precious metals have gone up. And the other thing I'd like to cover is the U.S. Treasury yields, because those are very important, because they, they point towards where interest rates are going and what the Fed might do. So the 2-year yield, half an hour before the number, was yielding 0.79, the 2-year yield. Now it's 0.75, so that's dropped 4 basis points. So the market's taken that as a weak number. Again, the 10-year yield is at 155. That's dropped 3 basis points, and the 30-year yield is at 222. That's dropped 2. So the curve is actually steepened slightly because the 2 years gone down more than the 10s and the 30s. But basically, I'm not sure how. How that's going to affect the Fed's decision for September. A lot of people expect the Fed to hike rates on September 21st, 22nd meeting. And I will update you later on what happens, in terms of the Fed. But the markets at least are taking this as a weak number. This is still early days. It's still, 20 to 9 a.m. New York time. We still got, 40 minutes until the stock market opens in the U.S. So I just wanted to give you a fresh update and how I've perceived the numbers as being. So they're broadly weaker than expected numbers. The previous non-farm for July was revised up from 255 to 275, but the market doesn't seem to be really focusing on that. The fact that average hourly earnings, I think that's important. They're quite weak, 0.1. That's not very strong. Unemployment rate didn't drop. And also the private payrolls, if it wasn't for the additional government jobs, this number would have been really weak. And is government really create any wealth? I don't think so. So if you enjoy my quick update on the economic data, please like, share, and subscribe. We also accept donations if you like my videos. There's a few links below in the description. You can donate Bitcoin via PayPal or Patreon. Take care. Bye.